Welcome back to the Grow Wealth podcast and our next episode on tax strategies. Well, tax season is here, and some of you have already filed your taxes or looking to file it, and you're wondering how much I potentially owe this year. Quite frankly, I don't know of a single person who enjoys filing their taxes. It causes a lot of distress, and to the point where we don't even want to think about taxes until we actually have to file them on close to our deadline. And believe me, my listeners right now, as soon as I said this, are shaking their head, yes, right now, I hear you. Well, having the right CPA on your team makes all the difference in the world with what you keep and what you pay. After all, building wealth is just not about earning, but also more about what you keep. And this comes down to three things: managing your personal finances the right way, knowing how and where to invest your money, and finally, having sound tax strategies to preserve your money so you can take that and keep investing and grow your wealth. The tax code is mostly written for entrepreneurs, real estate investors, business owners, and the more you understand it, as you work with the right tax professional, the better off you're going to be. So the typical person usually scrambles and meets their accountant once a year, and they file their taxes and then they're done. Well, you don't want that. You want a stellar accountant that knows the tax code inside and out, that's going to work with you throughout the year and guide you in the right way. And today's guest is a small business, tax, and legal expert who stands out from the rest for his depth of knowledge and the amount of advice he freely offers. His name is Mark Kohler. He's a CPA and an attorney at the firm Kyler, Kohler, Ostermiller, and Sorensen, and the accounting firm Kohler and Iyer CPAs. In addition, he's a national speaker, radio show host, writer, and video personality for entrepreneur.com. And to add to that, he is a real estate investor. He's also finally the author of What Your CPA Isn't Telling You, as well as the Tax and Legal Playbook. So he's here today. He's going to offer us some tax advice and strategies for us to take advantage of so he can help you save some money. So lovely to have you, Mark.
Aisha, thanks so much for having me. It's an honor. Thanks for that wonderful introduction. Woo! I'm excited.
Woo. How are you today?
Good. Excited to be here.
Good. So let's start with, in your work, you talk a lot about the trifecta.
Oh, wow. Yeah. We got to jump to the trifecta. Let me throw this out first, though. In your introduction, you said some interesting things that I think we really need to address. And it is sad and it's regrettable that so many people are like, well, I'm only going to deal with taxes when I have to. And it's that once a year meeting. I cannot tell you how bad that is, people. If you're a real estate investor, a crypto miner, an entrepreneur on Main Street, a consultant selling crap on the web, doing affiliate marketing, any of that, it is not about finding the right accountant. It's about taking control of your own financial life and knowing just some good basic tax strategies. It's not that complicated. It's fun. It's like when you go shopping and you see how much you save. I want you excited to do your tax return because you're going to see how much you're going to save and how much you can start building in a tax-free format or tax-deferred format, or just not paying as much taxes as you have to each year. And so I'm so grateful you're having me here. This is so important, so powerful that you've taken the time to do this.
Absolutely.
And I just want to challenge everybody to embrace the topic. I loved what you said. It's always not how much money you make. It's also how much you save and put away. And I'm sick and tired of people going to these rah conferences where people spend thousands of dollars so I can learn how to make more money. But heaven forbid, we have a conversation about how much to save and being freaking organized and taking time more than once a year to just deal with taxes. This is the number one expense in small business owners' lives. And they just want to talk about it for 30 minutes and forget about it. Bull crap. That is not the way to do it. So I'm so glad you're having me. I get excited. I get pissed off when people just, so important. So love your intro. So good.
Thank you so much. I appreciate that.
Oh my gosh. Well, trifecta then.
Trifecta. You talk
Trifecta.
about that a lot. Can you shed light on what that is and why you think that's the best way that we should set ourselves up for building wealth?
You bet. Well, the trifecta is a concept I came up with I've been teaching it for years, but finally gave it a kind of a name 3 or 4 years ago. And it's really taken off out there and it's really helpful. I think all of us learn most easily with a picture. We need kind of a picture says 1,000 words. We need a framework that gives us a way to structure our business and tax life. And it really gives us better protection from a lawsuit and saves us taxes. So the trifecta fundamentally is this 3-legged stool, if you will. If we were in front of a whiteboard, at the very bottom at the base of this trifecta would be your trust, your revocable living trust, your estate plan. It's there. And some of you are like, well, I'm not old enough, or I don't have enough money, or I don't have kids. Holy hell, all of you need a freaking trust. A trust provides privacy. We have got so much to worry about with scams and identity theft and all of the crap. This week, I've probably gotten 15 different texts of scammers trying to get me to do things. Privacy is more and more important in this digital age we live in. And if a revocable living trust is there for, when you die, where's all your crap go? I get it. But it's also there to make sure your name is not on all of your assets, on all of your properties, on all of your LLCs or your retirement account beneficiaries or your small business. We have a mail forwarding system for privacy. We want to use your revocable living trust to protect your name from being out there. You want to freak yourself out, just go Google your name, anybody, and it's scary. So we're focusing more and more on privacy planning for our clients, and the revocable living trust is a huge part of that. So that's your foundation in the trifecta. That's the bottom. Then we take a line and draw it right down the middle of the paper and split that trust in half. On the left side are our operations. That could be a day job where we have a 401k at work and we're doing the matching out strategy. Just put enough to get the match, you're out of there. You may be married and one of you have the day job with the benefits and stability and the other one's building the business. You may be flying solo and have a part-time job or whatever. Now it's estimated 45% of Americans, it's almost 50% after COVID, 45% of Americans have a small business on the side, whether it's driving for Uber or DoorDash or a consulting or just a little bit of manual labor or selling something on eBay. That small business gives us so much opportunity to do tax planning and also to build more cash flow and more wealth. So the left side of your trifecta is typically going to be an entity that we can build upon. Maybe it starts out as an LLC. It could be a sole prop until you graduate further along the process. Typically for my entrepreneurs, it's going to be an S corporation. S is in small corporation. And so the S corp is where, gosh, oh my gosh, every dentist, doctor, realtor, broker, plumber, electrician, consultant, online marketer, crypto miner, crypto staker. I mean, we're all using the S corporation. The S corp is your left side of the trifecta. And all of your operational income from your day job and your small business flows downhill, just like water flows downhill. All that money flows downhill into your trust and 1040 tax return. Now, trust, you don't do an extra tax return with a trust. There's no annual fee. There's none of that crap. But that trust is providing privacy on public record for all of your assets. But your 1040 is where all that money flows down from the left side. Okay. Now, I'm almost just done here. You're I know you're being so patient. Okay. The right side of the equation is your asset side. So the asset side is your passive income. We may have retirement accounts in there, Roth IRAs, 401ks, HSAs, anything that we can do tax-free or tax deferred, but it's also our LLC for the rental property. Rental property may be in our retirement accounts. It could be our stocks or notes or crypto or real estate, but we want to have our assets in their own entity. So you have an entity for your holding and an entity for your operations. And those two buckets flow down in a triangle, if you will, to the base, which is your trust. So that's the trifecta. We want assets on the right, operations on the left, and they all flow down into your 1040 and your privacy strategy. And when you get a picture of that in front of you and you're like, okay, now I can take tax deductions over here. I can build wealth here. I've got a firewall for asset protection. I know where I'm going to pay off debt. I've got reserves. And that picture, I carry around mine with me everywhere I go. We build a trifecta for every client that wants to do a tax plan or an entity so that we can really give you a plan for the year and your next 3 years, 5 years, and 10 years so you know where you're headed. That's it.
Now, on the operations side, when does one graduate from an LLC or sole proprietorship to an S corp? Does your business have to be earning a certain amount?
Yes, I want to see the transition point is around $40,000 net. So you might be bringing in 60,000 in sales, commissions, 1099s, Venmo, PayPal, Apple Pay, whatever it is. You might be bringing in, let's say, 60 grand. And then we've got $20,000 in write-offs, cell phone, travel, home office, computers, electronics, marketing, legal, accounting. And so you've got all these write-offs that you're constantly taking advantage of. And if you're taking home around 3,000 a month or more, you're the perfect candidate for an S corp. Now, can I have one more thing on this? Let me give an example. My daughter.
The floor is yours.
No, but a quick example on this is my daughter, Sydney, who's a realtor. And I just love it. When she was 12 years old, I said, you're going to be a realtor. She's like, all right, whatever the hell that is. She probably said, not hell, but anyway, she was a good little girl. But so my 12-year-old daughter, Sydney, I said, you're going to be a realtor someday. She's phenomenal. She's down in Orange County, California now with a great brokerage. Well, when she became a realtor, I set her up as an LLC, limited liability company.
Correct.
Now, LLCs do not save taxes. So many people are like, well, I got an LLC so I can take write-offs. Doesn't matter. You don't have to have an LLC. Well, I did an LLC to save taxes. No, you didn't. LLCs do not save taxes. They're a structure to get a tax ID number, to get a bank account, to reserve a name, to do marketing, to look legitimate. But you can convert an LLC to an S corp, even retroactively for up to a year, when you hit the right level of income. So the LLC gives us a lot of flexibility to say, oh, I need to be an S corp. I'm going to do an election. We charge $150 to do the election. So super simple and easy. So why did I set her up as an LLC? When you say, well, Mark, just wait until she makes money, then you do an S corp. The problem is you can't backdate and set up a new S corp. But I can backdate and convert an LLC to an S corp. So when clients say, well, I don't know when I'm going to be ready for an S corp, but I'm going to start a small business. Okay, cool. Let's get it legitimized. Let's get it your name reserved. Let's get it corporate credit going, or an EIN or a bank account, and start treating the business treating the LLC like a real business, and practice our separate accounting and all those goodies. Once you start making that 3,000 or 4,000 a month, sometimes it catches you off guard and you're in the middle of the year and like, oh my gosh, my business is taking off. We can wait till the end of that first year where you break that threshold and backdate it to the beginning of 1/1/22. We can see where you're at throughout the year and then turn it into an S corp. So the point is, don't wait until you make 40 grand and go, oh, I should have done this, because I can't backdate, but I can backdate an LLC. So we start as an LLC and then we convert to an S corporation when the time is right.
And the S corp will give you tax advantages.
Yes. Now that's where the tax savings comes in, because if you just, let's stick with a realtor for a minute. So let's say you brought in 60 grand, you had 20,000 in write-offs, you net 40. In a sole proper, an LLC, you pay self-employment tax on $40,000. Well, that's 15.3%. Holy crap, that's $6 grand in self-employment tax. Then I've got to pay state tax. Then I got to pay federal tax. Crap, you could be into that 30 or 40%. And you're like, what the
That's a
freak
lot.
happened? Yeah. With an S corporation, you can take that net amount of 40 grand and split it. And we can split part into payroll and part into a draw or pass through. Think of it like a dividend. So we kind of call it the payroll dividend split. It's not really a dividend for you hardcore accountants out there. You know that. We just call it pass through, but think of it as a dividend. So it's a salary dividend split. So on 40 grand, if I just take $20,000 as payroll and $20,000 as pass through, I just save 15% on $20,000 because I don't pay the F word, FICA. That's the F word in accounting language.
15%.
Yeah. I only pay that on the payroll portion, but not the draw. And so I just split that $6,000 bill in half. So those people that are in California were like, well, I don't want to set up an S Corp and then I got to do a tax return and blah, blah, blah. I'm like, hold it. It may cost you a couple grand. You just saved 3. Let me see. Let me do the math. Spend 2, save 3. I think this is pretty easy math. Okay. Spend 2, save 3. Now, people, the more money you make, the more you save. So this is why, again, every accountant, lawyer, plumber, accountant, attorney, engineer, dentist, doctor, broker, agent, contractor, plumber, we're all S Corps. We're all S Corps. Joe Biden has an S Corp for his book deal. It's right there on his tax return. You can go download it.
Interesting.
S corporations are the way to take your book royalties and your book deal or your consulting that you're doing on Elance or whatever. So the S corporation is the way to do business when you're making more than 40 grand. Now, I'm not saying the split on 40,000 is 50-50%. I've got a table. You can go out and Google it. I've got books on this. But I've got ex-IRS agents that are partners in my firm. And if you get audited and we told you what your payroll level to take and you get audited, we'll pay the penalties and interest. Never had to do it in 22 years. So if your accountant says, well, Mark Kohler's too aggressive, or you can't do that. Really? We'll sign your return. We're good with it. Your accountant's scared of their own freaking shadow. Are most accountants not want to talk and they're scared? They're the kids that, sitting up in the bleachers while you're down below, drinking under the bleachers at the football game. I'm not saying that was you, Aisha. I'm just saying. I'm a little more nerdy, but that was me. All right. Anyway, so S Corps are a perfect fit for your small business.
Excellent. Now you've got a book out there, what your accountants aren't telling you. No. What other that we haven't talked about tax strategies would you like to share that the typical accountant is not telling us?
Well, that book, What Your CPA Isn't Telling You, gosh, it's a reveal. I don't know. I mean, I want everybody to have to read it because, it's going to be a made for TV movie. So I don't know if I want to reveal the secret there, but here's a couple thoughts in general. And Aisha, you're behind this 110%. Real estate is one of the most tax preferred wealth building strategies in America.
It is. Well, I tell people that all the time.
Now, if you own real estate, but you can't give me, I'm not saying this about you, but if you're listening, you own rental real estate and you can't give me a 10-minute speech on how you save taxes with real estate, you don't know what you're doing. People, you've got to understand why you're doing what you're doing, not just doing it because someone told you to. Wealthy people know how to read a profit and loss statement. Wealthy people know how to read their tax return. Wealthy people know the tax strategy of real estate professional and pass-through losses and 1031 exchanges and opportunity zones and charitable trusts because they listen to a freaking podcast like mine where they're like, oh, not only do I listen to Tony Robbins on how to make money, I also listen to Mark Kohler on how to save money.
Or they listen to my podcast with you as the guest.
That's right. Yeah. No, I hear you. But it's the yin and the yang. And so real estate is one of the big secrets. Self-directing your retirement account and investing in what you know best, avoiding Wall Street products for every, penny you have. You had my partner, Matt Sorensen, on recently to talk about that. And Correct. That blows people's minds too. Here's what I would say in maybe summary as well or not summary. I know you got a couple more questions, but people, if you own a small business, you should be able to rattle off 10 cool tax strategies just like that. How do you write off your home office? What are you doing with your vehicle? Are you doing mileage or actual? Can you write off your cell phone? Can you write off your Apple Watch? Do you understand the strategy? How are you writing off travel? How much of travel can you write off? How many days when you travel? What are you doing with dining? Did you know dining is 100% write-off this year and last year because of COVID? What are the rules when you dine by yourself? When can you write off 100% of your meal, even if you're not with someone? Do I have my kids on payroll? Am I paying my kids to help in the business? Am I funding a Roth IRA? What am I doing for my health insurance? Can I write that off in my business? Okay, just those 8 to 9 questions that I just threw out. If some of you are like, holy hell, I don't know the answer to that, then listen to my freaking podcast. Buy the damn book. You can't go meet with your accountant once a year and think you're going to get force fed this. I teach more accountants than I teach entrepreneurs because accountants don't know this. They don't learn this in school. It's getting out there on the streets and learning it. Ugh, so powerful. So people, you are the captain of your damn ship. I'm sick and tired of people coming and going, yeah, well, my accountant missed it. No, your accountant didn't miss it. You missed it because you think they're going to do it for you. You are the captain of your damn ship. Take control of your finances. Take control of your tax return. You don't need to know which line they're going on. You don't know which form to use, but you know the strategy. And when you bring it up, if your accountant poo-poos it or looks like a deer in headlights, you got the wrong damn accountant.
Right.
Boy, I'm passionate about this, aren't I?
You are. I love it.
Caught me on a Friday afternoon. I'm like ready to get out of here. I'm like,
All right. I'm going to throw one more question at you since this.
No. I didn't mean.
Oh.
I didn't mean get out of your podcast. I just, All right, go ahead.
Well, since it is tax season, what about tax credits? Aren't there extra tax credits this year that people can take advantage of?
No. I mean, well, okay, fair question. Okay, let me throw this out. What you said in your introduction, I wanted to cover this too. When you said some of you have already filed your taxes or you're wondering how much you're going to owe people, 70% of small business owners don't even file until the summer. You should all be extending, getting your crap together with good bookkeeping and strategies, figuring out what you missed last year. If you're trying to tax plan right now for last year, it's too late. You should file an extension, get your shiz together, look at your books, look at your write-offs for last year, and learn and improve on that so you're doing better in 2022. You actually reduce your chances of an audit by 15 times by extending. You reduce your chances of an audit by 1,500% by simply extending. Don't rush out and do your effing tax return in March or April. That's what the idiots do that work for big corporations. You're a small business owner. You need to sharpen the pencil. You need to figure out where you left off last year and what you're doing this year and have a strategy session. Listen to a few podcasts, buy a freaking book and learn about this. Every dollar you save in taxes is dollars you're putting in your pocket. So are there tax credits this year? Yeah, you could buy an electric vehicle. You could buy, I guess, some very, energy efficient appliances for one of your rentals. You could look into solar energy. Tax credits are a unique thing. That means you're getting a dollar for dollar credit against taxes you owe. Usually the only people that are getting tax credits are poor people. I'm getting a tax credit because of earned income credit. I'm broke and I have kids. I'm getting the tax credit because I don't make enough money and I have childcare for my kids. I'm getting the tax credit because I have too many kids. I'm getting the tax credit because I'm broke. My entrepreneurs make money. The people that listen to your podcast make money. Chasing tax credits is a waste of effing time. What you want to be looking at is, I'm going to do a board meeting in Hawaii this year. I'm going to do a board meeting down in Miami when I go to Mark's Crypto Tax Summit. I'm going to go to Mark's Real Estate Conference in Chicago in August. I want to write off the whole trip. I want to write off 100% of my airfare, my hotel. I want 100% of my food write-off. I'm going to buy a new computer. I'm going to write that off. See, entrepreneurs find a write-off for every damn thing they're doing.
Certainly do.
Write-offs are what we're looking for. Credits are for people that want the government to pay for them. That entrepreneurs are independent. They take care of themselves. They work their asses off, and they're not looking for credits. Unless you want to buy a Tesla, which that's kind of cool. You get tax credit for that. But anyway.
You.
All right. Hopefully that helps.
Absolutely. So how can people get in touch with you if they want to?
Well, here's the best. If any of you thought, oh my gosh, this guy is nuts, and he's so passionate about this, which hopefully you got from this podcast, folks, if you're listening, just start listening to my podcast once in a while. Main Street Business Podcast, mainstreetbusinesspodcast.com. Also, I've got plenty of books, videos.
I mentioned 2 of your books in the introduction, your 2 main books.
Good. You can get over to markjkohler.com, Mark, M-E-R-K, J as in Jolly, Kohler, Kohler.com. You can see what workshops I have going on this year. Pick up any of my books or workbooks. Also, getting over to YouTube. I do so many YouTube videos for free. Every week, I'm shooting 2 to 3 videos. I've got my silver play button. I've got hundreds of thousands of subscribers. There is no other person in the tax and legal arena that has as many videos as mine, or views, or subscribers. So I'm hoping many of you would find that comforting, that you're actually in the right spot. So subscribe to me on YouTube, subscribe to the podcast, get over my website, look at some workshops. All of you, if you're an entrepreneur, you should be doing a business strategy, coaching, wealth building workshop every year,
Of course.
and a tax and legal workshop every year. What am I doing to structure my business properly? So come check out one of my workshops. We're doing Chicago, Honolulu, Dallas, Orange County. I'll do a virtual. A lot of times I get up to Seattle, Philly, anywhere. Check them out. You'd love them. Be fun.
Are the dates online?
Yes, they are. They're
On the
all on my
site.
website. You'd love it.
Fantastic. Anything else you want to add before we close up the show?
Just take control of your ship, people. You got to get me, it all falls on you. Don't think you can delegate this tax and legal stuff. Just like you can hire 3 different contractors to remodel your kitchen and get 3 different jobs, 3 different prices, and one of them's going to suck. Same thing with your tax returns. They're not just, they are what they are. You hire the wrong accountant, it's on you. You better know what the hell you want and be able to talk about it. And don't let them scare you. Most accountants are too conservative, and they're not going to push the envelope. You got to demand creativity, demand aggressive strategies, and learn. So there you go.
There you go. There you have it.
Woo!
Thank you so much, Mark. What
Thank
a
you.
great podcast. Such full of energy. I loved it.
I appreciate it.
And
Thank you for
lots
having
of information.
me. Thank you. Thank you for having me.